During recent periods of volatility, green, social, and sustainable bonds have fared well. Well, we think it's time to increase exposure to these high-quality bonds thanks to attractive yields. So why is this the right time, and what should you know? Find out right now on UBS Trending. Hi, everybody, and welcome to another episode of UBS Trending. I'm Anthony Pastore. Thank you for being here with us. So Michelle Liberty is back in the studio with me. Michelle, always good to see you.
Thanks for having me.
So we've been talking quite a bit about this message and focus from the Chief Investment Office about buying quality bonds, and right now seems to be the opportune time to do so. Just give us a quick walkthrough of why this is the case right now.
Yeah, it's a great question, and to put it really simply, the days of having no alternative to equity investments are long gone. There's actually plenty of attractive alternatives to equities out there today, and we do think that investors can take advantage of this higher yield environment. If you think about, if higher interest rates aren't great news if you're trying to borrow, right? If you're trying to take out a mortgage or something like that, higher interest rates aren't great. But on the flip side of that, you can actually take advantage of that and get that higher rate by becoming a lender. So we do think, putting all of this together, it's a good time for high grade, investment grade, and sustainable bonds. And we are nearing the end of the Fed's hiking cycle, and that's not to say there couldn't be a couple more hikes, and it's hard to get that timing right. But as we approach the end of that cycle, we do think that investors should take advantage of this higher yield environment.
Yeah, and speaking of the Fed, if you're looking at some of the recent economic data that's come out specifically around jobs, like the JOLTS job openings, they've been a little bit less than expectations, which is, I think, right now what the Fed is looking for to start calming things down and maybe halting their tightening cycle that we've been in for quite some time. So terrific, Michelle. But you did mention, obviously, and we're here to talk about the sustainable bond side. So we mentioned that is part of the buy quality bonds message and focus. So talk a little bit more about the specificity of sustainable investing bonds and how they differ from traditional fixed income.
Yeah, another good question. It's really about the use of proceeds, right? What is that capital that has been lent being used for? So sustainable bonds is a bit of a broader term. It can include green bonds, sustainable bonds outside of green, as well as multilateral development bank bonds. And in our view, these offer pretty similar or comparable risk and return characteristics to equivalent traditional bonds of the same grade, investment grade, high grade.
Terrific. What does the market look like right now for sustainable investing bonds, especially today, as we were talking about, given where rates are and some of the opportunities that are out there for investors?
Yeah, well, I think what's interesting is that we've really seen this market evolve pretty rapidly over the last decade. And green bonds or use of proceeds, again, those still make up a bulk of the market. But we're starting to see greater proliferation of other types of these bonds, so social social considerations within the loan structure as well. In 2019, we saw sustainability-linked bonds come to the fore. So a lot's going on here. In terms of yield expectations and whatnot, it's going to vary depending, of course, on duration and the specific bond. But just using MBDs as an example, MDBs, yes, as an example, they traditionally get about 5 to 30 bips over treasuries, and that's usually due to a little bit less liquidity in those, but again, very similar risk and return characteristics.
So some really attractive rates there for investors to think about if they're going into talk to their advisor, and maybe they recommend SI bonds, considering that they have more basis points available to them as a lender. That's terrific. Something interesting that I was reading about in the latest Sustainable Investing Perspectives piece put out by CIO is that the European Union has kind of reached a provisional agreement on this green bond standard that they're developing. Essentially, it adds more transparency in the European Union to what is actually in that sustainable investing bond. As many of our viewers may not know, anybody can call a bond a sustainable investing bond, but when you kind of pull it apart and look at it and peel the onion back, there may be some elements in there that are not truly sustainable. So talk a little bit about what the EU is trying to do here, because they really really have been at the forefront as ESG leaders and really pushing the sustainable mantra and the theme for their countries.
Yeah, so the EU did reach this provisional agreement. If and when formally approved, it'll take about 12 months to go into effect. But essentially, this regulation wants to ensure that the standards require companies to show that these investments support the company's transition overall and are aligned with the EU's taxonomy on sustainable investments and sustainable finance. And that taxonomy does outline 6 objectives around climate change mitigation, adaptation, circularity, use of water, as well as pollution and biodiversity. So we do think that, especially against a backdrop of greenwashing concerns and whatnot, that this concept of transparency is going to continue to be important, and it could eventually enhance the credibility, as you mentioned, of some of these types of bonds.
What about the performance, though? I mean, essentially, you of course you want to have great performance in a fund that you have in your own portfolio. Could this potentially, obviously it's too early to know, but looking at it from a 30,000-foot view, could it affect performance?
Yeah, so again, just given that interest in credible solutions, it's possible that these fetch a premium versus other green bonds, but it really depends on supply. So we'll start to see more, again, if and when that regulation eventually kicks in. I think it's too soon to say before we see that supply side dynamic.
Terrific.
But yeah, if the supply is a little bit less, we could see a premium. It's something we'll have to watch.
Yeah, exactly. So we'll have to see. And as we said, it's only provisional right now, that bond standard, and then we'll see if it even spreads to other developed economies over time, which is sometimes difficult to do if there's different opinions on what it means to be a sustainable bond. Michelle, really quickly before we wrap up, so what's the takeaway here for investors from this chat that we're having?
Yeah, I would just say the takeaway is that yields are attractive right now. So take advantage of it while we can.
Yeah, and I love the way you put it, that if you're somebody who thinks about higher interest rates, you automatically go to a higher mortgage rate, a higher car loan rate, higher credit card rates, if that's the case, home equity loan. But at the same time, yes, that's true, but you can make up for it by earning more interest on the side of being the investor, the lender.
Exactly.
So great takeaway there, Michelle.
Doesn't have to be bad news, right?
That's right,
Yeah.
That's right. You got to balance it out, right? Michelle at Liberty, always a pleasure. Good to see you.
Thanks for having me.
And for more information from Michelle and the rest of the Chief Investment Office, please visit the Insights website at ubs.com/views. Plus, make sure to follow UBS Studios on our brand new relaunched UBS Trending Instagram channel. There's terrific content up there, great sound bites, promotional videos, content from colleagues like Michelle and others. So please check that out and follow us on Instagram. Again, that's UBS Trending. And as always, if you have questions about your portfolio or think that investing in sustainable bonds or any of the quality bonds we talk about here on the show are right for you, talk to your financial advisor. Until next time, I'm Anthony Pastore. We hope you have a great rest of your day. And remember to keep your eyes on what's trending. We'll see you soon.